Welcome back. You're watching Startup Central with me, Nayantara, working from home. This is the only show of its kind on Indian television dedicated to startups, innovation, technology, disruption, entrepreneurship. We got you an ET Now exclusive. Triller is a California headquartered social networking app backed by the likes of Eminem, the world famous rapper. It recently bid $20 billion for TikTok. In India, since the TikTok ban, Triller has registered more than 40 million downloads. It's also brought on board popular TikTokers, including Bhuvan Bam as well as Arman Malik. But Triller has now run into a legal tussle with India's T-Series. T-Series, we understand from our sources, has sent a legal notice to Triller. Triller has received this legal notice according to T-Series for infringing copyrighted content. T-Series has accused Triller in this legal notice accessed by ET Now of copying, storing, streaming copyrighted music, composition, lyrics, posters, and also making all of this copyrighted content available for download. T-Series has accused Triller for doing all of this without getting any license to do so from T-Series. T-Series then goes on to say in this legal notice that Triller in fact has tried to build upon its popularity, its user base in India, based on its copyrighted content, how it has also popularized itself on social media networks, but has not taken T-Series permission at all. T-Series goes on to say it will initiate criminal and civil proceedings if Triller continues to allegedly infringe the copyrights, and T-Series did send this legal notice to Triller via the ERA law firm. That's the name of the law firm. We did reach out to the law firm, we reached out to T-Series as well, and there, in a nutshell, what they're saying is that music is not free, content is not free, and Triller has been sent the legal notice. The matter has still not been resolved, and it can't use the copyrighted content without permission, without seeking a license, without seeking the proper permissions as well. In a nutshell, Triller should not grow at T-Series expense. So this, of course, is going to be, it's something to talk about as well as everything moves digital. Where does it, how does one even stay vigilant when it comes to copyrighted information, copyrighted data, patterns, all of that. So, it's going to be interesting to see also how everyone stays on top of this entire matter, and we at ET Now will be right on top of this story. Well, let's shift gears now, and I'm going to talk about a startup that has raised $70 million. During a pandemic, that's a lot of money to raise, right, for a startup. Now, what if I were to tell you that this startup is actually in the business of home decor, of renovation? The question is, are you interested in home decor right now? Are you interested in going for a renovation? Well, guess what? Investors clearly think that that is about to change. I also found the timing to be so interesting. I don't know whether it's by coincidence or by design, pardon my pun, that this fundraiser happened before the festive season. So joining me to talk about this fundraise now is Livspace and the co-founder Ramakant Sharma. Thank you so much for joining us here on Startup Central. $70 million. Congratulations. The big question, of course, I just asked is how many of us would be willing to go in for a renovation? And clearly you think that's about to change, and your investors think that's about to change.
Yeah, so thank you for inviting. So a couple of things. I think the fundraise is not $70 million, it's $90 million. And the thing is, I think home renovation and fundamentally two things have changed in the industry. One is what we are seeing, these are early data points, but two clear trends. One is, I think the need for renovation while you're living in home has actually increased. In a way, you give more importance to the things which we are not really giving, like home office, home gyms, the larger size of kitchens, buying more things, maybe cooking yourself as compared to more as compared to before. So a couple of things on that direction. Secondly, the demand for our kind of business is not the function of buying new homes now. The homes which are going into positions have been bought in past, maybe a year before or 3 years before and 4 years before. So somebody who gets a position of a home now, I think the person is in such a financial unprecedented scenario where uncertainty around financial scenario end up paying rent and EMI both. So in the interest of minimizing rental costs, they need to make the new home rent ready or ready to move in, which essentially needs some degree of interior works. Like in Indian context, mostly the new homes are bare shell. They do not have kitchen, wardrobe, and a very basic curtains and lights. So I think that is something which is a necessity to use an asset. And these assets homes are typically one of the largest purchase Indian consumers would do in their lifetime. So I think this is not a consumption of a class where somebody really consuming it. It comes very close to investment. It saves your rental cost. Secondly, the demand is not a function of what the new launches or the new purchases happening now. These are past purchases. The last point is the home design and a renovation is not a new industry. The larger part of the industry was catered by unorganized segment, which was contractors, carpenters, offline interior designers. So I think the pandemic has really led to a shift from unorganized supply to organized supply. For instance, in a city like Bangalore or Mumbai or Delhi, you want to renovate your home now through a contractor. It's very hard to find a reliable, trustworthy contractor, and you don't want to take chances in this kind of environment. So naturally, the consumers are shifting towards organized players. Within the organized players, also the internet consumption in general, I think have increased while we are staying at home, lots of lockdown activities. So that the consumer behavior is definitely on a rapid scale, and we see a very speedy recovery from the downs of April and May. So I think we will be almost on a February scale by next month. So that's the kind of recovery path, and the hypothesis and the sentiment seems a major disruption on the unorganized sector. So the demand is shifting back to organized. Within the organized, I think the internet first brands will take the larger market share. So that's the thesis. Secondly, I think the need is very fundamental. So yeah.
So you're saying these are previous orders, right? So are you saying that people are now willing to go through with their orders? Are you seeing a change in consumer behavior where, people are okay with workers and all coming to the house to renovate, bring things in? Or are you perhaps seeing most of the new orders or the execution of the old orders being for offices, etc.?
It's both. I think new orders to not old orders to live space. These are old orders to real estate builders. What I was hinting is these homes have been bought from real estate builders long back, 2 years back, 3 years back. They are going into position now. The moment you get a home position, you seek somebody who can do the basic interiors for you so that you can move in into the home. So that's the demand segment coming into. Secondly, to cater to that demand, the alternate choice of non-organized has reduced. That's not really reliable and available, and consumers do not want to take a chance with unorganized contractors and carpenters. We are far more SOP driven. Safety measures are there in the process. So I think lots of the demand is shifting to a platform like Livspace.
Can you very quickly tell us what's hot and trending at the moment? Anything that you're seeing before the festive season?
I think see the most trending is home office nowadays, because the value and the kind of little bit working from home has become I think in my opinion it is going to be a permanent shift to some degree, and consumers really wants to invest towards home office and a larger kitchen at this point of time.
$90 million raised during a pandemic, no small feat, and that also for an online home decor startup. Thanks a lot, Ramakant, for joining us here on ET Now. With that, we're going to take a short commercial break, but don't press that button. On the other side, we will be joined by yet another startup which has managed a very successful funding round, another big amount.